Hello once again, this is Oliver Velez, and this is part 2 of a two-part series entitled A Time to Reverse. Last issue of the Velez Opportunity Report, but certainly was a play that many of my followers are aware that I follow. This is the inverse ETF that mirrors the NASDAQ 100 in a reverse fashion. The symbol is QID, and as you can see, based on the chart, we had an identical pattern, the 45-degree angle multi-month drop to the downside, remaining steadily below its declining 20-period moving average. Note how during the downtrend, during this 45-degree angle, not a single bar gets out of hand. There is not a giant red bar. There's not a giant green bar. In fact, the bars are tight. They're contained, signifying the highest degree of power on the part of the bears to the downside. It is only recently that the bars on the bullish side began to become quite chunky, quite substantial, quite powerful, quite thick, quite fat. And when that very subtle change happens, it grabs my attention in a very, very big way. I brought many traders in my chat room I brought their attention to this stock, this play a couple days ago, and the entry came once again, just like the other two, once Quid was able to break above this brief consolidation period over the last 3 weeks or so. I love the way the bulls are starting to show more frequent a more frequent ability to stage a powerful day. And yesterday's powerful day, poking above a multi-week consolidation in the $16 area, was my trigger with a stop at $15. Stay close to me during this play, as I will continue to build it if, in fact, it does remain and continue to produce bullish signs. And last but not least, I'd like to bring your attention to another potential short, which is the financial bear 3 times short. This inverse indicator mirrors the financial, banking, and insurance industry. And as you can see, the pattern is similar, a 45-degree angle multi-month drop below the declining 20-period moving average. The bars were tight, no bars got out of hand, and all of a sudden in the middle of May, all right, we start to get a shift in the balance of power. All of a sudden, certain bars become chunky. They become fat. They suddenly become more solid than they've been in a very long time. These solid, chunkier bars happen to be one color dominated, green, signifying that the bears are losing control. The bears are stepping up control. And if FAZ, symbol FAZ, manages to trade, all right, above $13, it will trigger my entry, and once that happens, I will place a protective stop at $11. Actually, that's wrong. I made an error here. I'm going to place a stop here at $10.80. All right, so I'll look to enter at 13.01 or thereabouts with a stop just below $11, $10.80. Should this play trigger and continue to show bullish signs, I will gradually and incrementally build my position to a larger one, looking for at least an initial target zone of $21 to $22. Stay very close to me during these 4 short plays. Until next time, this is Oliver Velez signing out.